Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, April the 14th. The year is 2021. Let's talk trading. Taking a loss versus losing with Walmal. You know, we may have talked about this once before, but we're going to revisit it because I guess there's some traders out there posting some replies that maybe they have a little misunderstanding. But what's really important is for you to remember these videos are for educational purposes only, and your results may differ from mine and from Walmal's. Walmal, so, taking a loss, versus losing. I mean, taking a loss is part of trading, but walking away at the end of the day with less money than you started, that's losing. What do you say?
Exactly. That's the whole thing. The most important thing is to make sure that you can come back and trade again tomorrow, and that has to be paramount to everything. And to folks that are out there, I've noticed a couple of comments on Facebook and a couple other places where they talk about where they took a loss of X pips, taking the Walmart trades, and I'm looking at it and saying, well, why did you stay in that long, because type of thing, clearly price, it went and broke, let's say it went and broke, the 90 line or the 80 line or whatever it was, and it went up by a pip or 2 pips, and then turned around and went against you. Why would you let that go and run against you 7 pips? Sometimes it's better, I'll take a pip loss. Take a 2 pip loss. I'll just wait for the next trade, wait for the next time to come along, because if I do that, and I get the next trade, then you're pretty good. In fact, yesterday, I think I alluded to it on the video yesterday, where the first trade out of the box, I took a 7 pip loss, and that was probably a mistake that I went and took that 7 pip loss. I probably should have gotten at it a little bit earlier, but then I got 2 10 pip trades in a row, so it's up 13 pips for the day, and that's just part of trading. You're going to take losses, just minimize the losses as best as you can, and you should be good, and that's the whole thing, is minimizing that loss. In fact, earlier today on taking Walmart trades, I went in, took a trade, and I was up, I think maybe 3 pips or something like that, and it came back down, and I just jumped out and said, you know what, I'm just going to get out, I'll take 1 pip, I don't care, and I'll wait for another entry. And what it did was it went down below the line, and it took off again, and I got in at almost the exact same spot. I had to pay commission again. I had to pay spread again. But so what? Because I got out of that trade again I think that time I got out with 2 or 2.5 pips. And then what happened was when I was actually up 5 pips and came back down, and I was like, I got 2.5 pips. I'm taking my 2.5 pips. Maybe I'll get another entry at some point. And I did that, and then the third time I did it, I went and got, I got 10 pips or something nice like that. That's just part of trading. What happens, I think there was one trader out there I believe it was on Facebook, went and said that they were up 8 pips, and they went and got out with +1. I don't think I would have waited to +1 to get out. It's the type of thing, I'm up 8 pips or, something like that, and it's starting to come down on me. When I get to 5 pips, I'm like, you know what, my core for the day is 10 pips. I'm halfway there. If I just get out right now, there'll be another trade that comes down the pike, but just wait for it. So I probably wouldn't have waited for it, to go down to the +1. Now, of course, if the market just, went and slammed against you, and that happens from time to time where, well, that's a different story. But if I'm up 8 pips, 8.5 pips, something like that, and now it starts turning around, I'm now down to where I'm only up 5 pips, and I don't see anything that's showing me that it's going to go back and turn around and go back the other direction, you know what? Get out. Take your 5 pips. Be happy with it. Wait for the next trade.
Yeah, because what I think somebody said something about, they got in a trade and it went against them. And I think they took a 10 or more pips stop. It's like, number one, if you're taking more than 10, then you're not trading the Walmart method. The other thing is that they said if they hadn't have taken that loss, then they would have made, X number of pips. I think it was, I forget what they said. Or the point being was, okay, so I'm looking at the chart here. Let's say this hour, you may have tried to go long at 80, and maybe you got your fingers burned. Maybe you took a 5 pip loss. But you can see here the last time it crossed 80. Well, right now it's above 90. So there was an opportunity um, to make your money back and then some. I mean,
Yeah,
yeah, it definitely, let's see, it hit 80 once, twice, three times before this last time. So it's just one of those things where, if you take one of these and you take a loss and you get mad, you don't take the next trade, and then you sit there and you kick yourself, oh, you know what, you did the old woulda, coulda, shoulda. It's like, no, you just take these trades because the statistics are on your side.
right, exactly right, and that's just what you got to do. Now, of course, this hour, if you would have taken the 80 long, you know, if you let your stop loss go as far as 7.5, you never would have. You would have gone and potentially made 15 pips on the trade. But, what I did was I went in, I saw that very first break on the very first candle. I was actually in that trade from the previous hour for a different reason. It wasn't a Walmal trade. But I got out when it got up to, I think it was 81.5. I got out of that trade and it ran down. And then what had happened was it ran up, back up to the 80. And what I did is on that one, I went and got in. And just for complete transparency, I was up a pip. I think after commission and everything else and spread, I think it was up like a pip or maybe zero point 0.9 pips or something like that. And then it ran down. And when it came down and on that big red candle on the next candle, I was actually down 2.5 pips. And then the very next candle, which had turned out to be a green candle, on that one, it started to run down. I said, what, I'm just out. I'm just going to go right here, just take a 3-pip loss, and that'll just be what it is. And then what happened was, probably about 5 minutes later, I went in again, and guess what? Did the same thing. And this time, I was up again, like almost a pip or something like that, and it ran down against me. But this time I was a little bit smarter about it and said, you know what? I got a red candle, and I said, you know what? I'm just getting out here. It's not doing what I wanted to do. And so what happened was I took a 1-point loss. And then it ran all the way down, and then I took the 80 trade again. And on that 80, actually, I didn't get in at 80. I got in late on that because I said, you know what, I'm going to wait for it to break those tops over there. And I got in at 82. And then I was able to go and pick up, I believe, I don't recall what it was. I told you earlier, but I think between everything, because I stacked in on that trade, and between the stack ins and everything, I was able to go and pick up close to 20-something pips, or maybe even a little bit more than 20 pips, because I got in with 2 trades. So that's what happens, and that's how you make that up. And what I'll do is for the traders out there, TRO, is I'll go and mark this hour up as to where all my trades were, and I'll post that on Facebook so everybody can go and see that.
Yeah, you could just put the Sonic on there if you wanted.
That's exactly what I'm going to do. I'll go and put the Sonic on it, and I'll just post it out so everybody can see where my trades were.
Yeah, so the main thing about, taking a loss, that's no big deal. But the thing is, you stay in the game and you just have to grind it out. And if you're losing, then you've got to look at what you're doing, because if you're saying, oh, the Walmal method doesn't work, well, it might not work for you, but it works. So what you have to figure out is how to make it work for you.
Yeah, and it's funny that you say that because we were earlier this week, or maybe it was last week, we were talking about Livermore. One of the greatest traders there ever been. And he had gone and said something along the lines that that a particular method may work for one person and be a complete failure for another person. It just depends on how you're executing it, and it brings into play all those other different things. It brings into play your personality. It brings into play how quick you are. With executing your trades, it comes into how much patience you have, because you can actually execute things too quickly too. You got to go and actually be able to pull all those things together, and so we have to go and realize that. So for me, I'd rather go and take a loss. I don't mind losing. If in the long run I don't lose the game, I don't mind taking a loss. It's sort of like, to put a different spin on it, you think about all the great military campaigns in the history of the world. Many times generals took losses on things, unfortunate that they took losses, but they took losses so that they can gain an advantage, and sometimes we do that. We have to go and say, I'm taking a loss here. I'm cutting my losses short here. I'm keeping enough, I'm keeping enough money in my account so I can continue playing, and I'm going to wait for that big run to go and help me out so I can go and get a big, nice run where I can go and not only make up the small losses, but I wind up with a nice run as well.
Oh yeah, well, we might as well do some disclosure on the big run because we both missed it. We were trading between, I think it was 64 and 54, and I told Walmal, I said, hey, there's a H4 pivot that needs to get taken out at 37.67. And I go, the question is whether or not I get out. So I was long at 60, and then it went up, and then I came back down. And you can see what happened here. And long story short, I got out somewhere around here, never gave me a chance to get back in at 60, and then ran up to 96.
Yeah. And I basically did the same thing. I got in and I got out with 5 pips, and it's sort of like, I could have had, I don't remember how many pips it was. In fact, I don't want to remember how many pips I could have had. But it was probably around 25 pips is where I could have actually had if I stayed in the trade. But that's hindsight though too.
Yeah.
And I can't complain about that. If I got 5 pips, that's half of my goal for the day. So how can I complain about in one trade getting half of what I need for the entire day? Yeah, it would have been nice to get 5 times what I needed for the day in one trade, but that's gonna happen, and and that's where I need to improve. I need to go and improve at going and sticking into some of those trades a little bit longer, and finding a way to stick in those trades. And every one of us is on a journey here, and we all got to go and improve.
Yeah, and the thing though, there was a couple clues. One was that H4 pivot that needed to get covered. The other was I put a horizontal line here at 37.65, and you can see how many times price got rejected off of that area. So it was like, sooner or later something's got to give. And what had to give was at 37.77. That was last month's close, if I remember correctly, the bottom of the candle. And so it was coming out of the monthly wick zone, and when it did, it popped out. And then also at 68 was yesterday's high. So there was all these points that if price breaks here, it's gonna go, and it sure did. Yeah. But it's like we knew these things ahead of time. We just I don't even know what the word is. We just didn't execute it that way. We were probably more focused in at our trade in the moment, watching living and dying tick by tick, as opposed to putting the trade on, pushing back, looking at the big picture, and saying, you know what, price will probably go here, and if it doesn't, I'll put my stop loss here. And so let's just do one of those RR trades like those structure guys do.
Right. And the thing is, everybody goes and talks about this whole idea of, top-down analysis. In other words, start at the highest time frame and work your way down. Well, sometimes I think it would be important for us that while we're in the trade, and we've gotten in on a 1 minute or a 5 minute or even a 15-minute candle, sometimes it may be good every once in a while you're in the trade, step it back out. To a 1 hour, a 4 hour, even a daily chart, and just get some frame of reference as to where you're at, and perhaps that would help you go and maybe stay a little bit longer. I'm not saying stay so long that it takes you from a trade where you're up 5 pips, and next thing you know you've lost that trade by 15 pips. That's not what I'm saying. Well, what I am saying is, hey, I'm up by 10 pips, or 5 pips or something like that, and instead of just popping out with the 5 pips, maybe sometimes it's okay to, especially if the price is still moving in your direction, stay in it, because, hey, there's a goal up there for it.
Right. And so one of the things, and we're almost out of time, but, that's why I wrote this price near indicator. So instead of having the lines on the chart, it tells you over here what you're near. So, fellow traders, we'll probably revisit this topic once again in the not so distant future. Just remember, when you're at your platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.